Chapter 10, Closing the Real Estate Transaction. This chapter obviously deals with closing, but what I want you to know is, again, I'm going to go through and highlight and talk about the important topics here in Chapter 10 you want to be familiar with. You will not have to, for the final examination, do any prorations. You won't have to complete a closing statement. You won't have to do any mathematical kind of equation. All right, so let's put your mind at rest there. Even though your book goes through all of this kind of stuff, you won't have any of that to be concerned with. So sit back and let me talk about the things that I think are important for you to know. And the first thing we talk about is with closing, the pre-closing procedures found on page 202. Simply means that in the closing there are items that the buyer needs to be concerned with, and there are items the seller needs to be concerned about. The buyer's issues are, does he know and is he prepared to bring the necessary funds to complete the deal? The second thing he needs to know is, how is he going to check to see if the title that the seller to the property that the seller is going to give him is marketable, merchantable, or clear title? Because that's one of the seller's obligation. How is he going to do that? Most of us don't know how to do that as prospective buyers. So usually we hire people to do that for us, or we require the seller to hire people to do that for us as well. How's that going to be handled? Is there going to be a final property inspection? When's that going to take place? Will I be entitled to a survey? So those are some of the buyer's issues. The seller's issue is, will he be receiving his payment as outlined in the sales contract? With title procedures, who's going to prepare the deed? Will he have a bill of sale? The deed to transfer the real estate, the bill of sale to personal property, maybe how he's going to hold title and severalty or co-ownership, tenancy by the entireties if it's a spouse. Will he have to produce a current abstract of title? Will his attorney have to give an opinion to that, or will the buyer's will the buyer's attorney have to give the opinion of abstract, or will, what's most commonly used, will the seller have to give some sort of title commitment or title policy? The seller might also have to issue an affidavit of title. An affidavit of title is basically a document that says at closing, I ordered the title a month ago and we're closing now, so within 30 days, what covers that period of time where no one's done a title search? And the affidavit of title is where the seller says, during the period of time from when I ordered title to the time we've closed, to fill that gap, I will give you an affidavit of title that promises you that nothing different than what you see here in the title report has taken place with the property. I haven't put any more liens on the property, for instance. The broker's role in closing is actually a pretty simple one. The broker's role is basically a sales agent, whoever is going to be at the closing, representing the seller. Sometimes sellers' agents show up. Sometimes buyers' agents show up. Sometimes none of the agents show up. But if a real estate broker or any of his sales agents are at a closing, basically their role there is to sit quietly and stay out of the way. We can go a little farther and say licensee may still be the person at the closing with the most knowledge about the transaction, so maybe they can be helpful, but you'll sit there until somebody asks you a question. Don't get in between the attorneys and their clients. You may also be part of the brokerage company's policy to attend the closing as a client service. So some brokerage companies do that, and then they bring maybe a gift or something to either the seller or to the buyer. Usually to the buyer, the new purchaser, the buyer's agent brings something for a closing gift. So whatever your role is, whatever the rule is in your office, find out what it is, who attends closings. But a little caveat emptor, a little broker beware. Your role at closing is basically to kind of stay out of the way and sit quietly unless you're asked questions. In conducting the closing statement is customarily prepared by the buyer's lender, sometimes by the buyer's attorney. Typical attendees at a face-to-face closing: you got a buyer, authorized agent and designated agent, seller's agent, real estate agents that for the buyers and the sellers, sellers and buyers' attorneys, representatives of lending institutions, title companies. These would be typically the people in what we call our face-to-face closings, which is what we have in Illinois. Some states have escrow closings where nobody has to show up at a closing. Everybody just submits document, and the closing officer, the escrow officer, lets everyone know when all the documents have cleared closing, and it's called closing escrow. But in Illinois, we do a face-to-face closing. Documents that the seller brings: a deed, title evidence, letter or mortgage reduction certificate from the lender stating the exact principal remaining, so that if the buyer is assuming the seller's loan, doesn't happen often, but if the buyer is assuming seller's loan, he knows exactly how much he's assuming. Affidavits of title, a payoff statement of the seller's loan if the seller's going to pay the loan off, a bill of sale for the transfer of the personal property, survey, transfer tax declarations, paid water bill. In most areas, you can't close until the water bill is paid. Other instruments or documents necessary to clear the title or complete the transaction would be what the seller would need to bring. What does buyer bring? Basically, he brings the money. Any loan documents to show that he's securing a new mortgage. He has to also show proof of hazard insurance or flood insurance if it's in a flood hazard area. Any other documents such as inspection reports that might be required by the lender or others. The closing agent or the closing officer conducts the proceedings at the closing, calculates the division of income and expenses between the parties, can be buyers or the seller's attorney, a representative of the lender or a representative of the title company. Typically, it's a representative of the title company, but can be other parties if other parties agree to somebody else. When the parties are satisfied, everything is in order, the exchange is made. Basically, what happens is the seller gives the buyer a deed, the buyer touches the deed, closing's over, buyer is now seized of title. There are some Internal Revenue Service reporting requirements, and typically these are the obligation of the listing broker. If the listing broker is not going to report to the IRS a report on the closing, then someone else should be doing that. So the form that's going to be filled out there is a form, you don't have to know this for the exam, a 1099-S would be the form, and it's going to include any exchange of real property. Information on that form is going to include the sales price of the property, the amount of property tax reimbursement, the seller's social security number, and if the closing agent does not notify the IRS, the responsibility of filing one form falls on the mortgage lender. So someone needs to be sure that that Form 1099-S is completed for the IRS. A part of this form is so there isn't money laundering going on with some of these transactions. It's one of the reasons why I do this. So if the IRS sees an all-cash sale for $1 million, it's probably going to raise their eyebrows, and they're going to want to take a closer look at a closing where there's $1 million in cash that was made. So we have legitimate transactions and not a way of hiding or laundering money through real estate transactions. The Mortgage Disclosure Improvement Act was an act that was passed for kind of a simple reason. The simple reason was to prevent prospective borrowers from receiving enticingly low rates when they initially applied for a loan, and then learned when they settled at closing, the lender charged them more fees, and of course it was too late for them to do anything about it then. So this act then was passed then to help protect borrowers from that, and here's how it works. First of all, when you sit down and apply for a loan with a loan officer, within 3 business days of making an application, they have to give you 2 documents. One is a TIL and one is a GFE. The GFE is the one I want you to know for our course and for our final exam. The GFE is a good faith estimate. Basically, it's a piece of paper that says, borrower, as a loan officer, based on what you told me, here is my good faith estimate of what you're going to have to bring to closing based on this loan that you're looking at this point in time and what interest rates are. So it's a guesstimate, but it's still a good faith estimate. The TIL is I forget what TIL is. TIL is the truth in lending statement. which is a piece of paper that says, borrower, based on everything, all the costs involved in this transaction, your APR, your annual percentage rate, is going to be about whatever percentage it is, 3.2%. The APR is a little higher interest rate than what your contract interest rate is because it takes into account all the costs involved in the real estate transaction. The APR is actually what borrowers should be shopping when they go from lender to lender, not the contract rates. The lender says we, have 30-year loans at 2.5%. We have a 30-year loan at 3.2%. We have a 30-year loan at 4.5%. That's not what you shop. You shop the APR because that takes into all of the costs that each lender is charging, and that's the way you comparison shop for loans, through the APR. You also are required 7 business days before the signing of loan documents after the borrower receives the final truth in lending statement and good faith estimate, and then 3 days to wait for closing if the annual percentage rate has changed more than 0.125% for the original or most recent TIF and GEF. You need to know that. If, in fact, before closing, with the APR that we just talked about has changed up or down more than 0.125%, then you can't have a closing until a 3-day period of time has passed. And basically that gives the borrower to take a look at whether or not they want to complete the deal if the APR has increased 0.125%. So we'll want to know that 0.125% triggers a 3-day waiting period for closing if that APR, which was originally given you, that APR percent originally given to you when you applied for the loan, has changed. Hope that makes sense for you. RESPA was an act that was actually passed back in the 70s, and RESPA basically is a way that we can make sure all sellers and buyers are given all of the costs involved in a real estate transaction so that there's full disclosure, and all buyers and sellers are informed where the money went, what they owe, what somebody else owes them. So it's a federal act, and it requires settlement process and costs, and it prevents kickbacks, it prevents referral fees that people aren't aware of, and information certainly about the mortgage. So in our RESPA statement, if you take a look at one, you'll see sellers' costs and buyers' costs and lenders' costs. And we'll talk about those more in a little bit more. But the idea with RESPA then is to provide this kind of truth in lending kind of thing through a form, through an act called RESPA. And what we use here is a HUD-1 closing statement. And we'll take a look at one in a second. This permits controlled business arrangements under certain specific conditions. So it does allow for firms that have controlled business arrangements with ancillary services, like a brokerage company might also be owned by a mortgage company that might be owned by a title company. We can have those, and you can refer people to those, but you must disclose that it's a controlled business arrangement with whoever you're referring your buyers to, typically the buyers to, and that disclosure is made of any of these firms that you have more than 1% ownership in. RESPA only applies to residential transactions, not to commercial transactions. So the big deal with RESPA is it provides a way of monitoring and discouraging kickbacks. Only residential properties. RESPA requires that when a individual takes a loan, the loan officer must give them a special information book. It used to be called Settlement Costs and You. Very riveting reading. I don't know if the buyers even read those things, but the special information booklet explains what the HUD-1 statement is in every line in it. The loan officer also has to give a good faith estimate of settlement costs. You can see an example on page 210 to 212. we must also use in residential transactions the HUD-1 settlement statement, which is found on page 214 to 216. And we also must also give a mortgage servicing disclosure statement, which says whether the lender that you got the loan from is going to service it, or in fact if they're going to sell the loan to somebody else and servicing will be taken by a different lender. Special information book important. Good faith estimate of closing. Again, if any of the APRs that are found, then we have to have a new truth in lending statement given. HUD-1 form is used. Preparation of closing documents on page 217. And again, we sort of talked about these before. These are the documents that we either have to prepare or things that we're going to see at closing. The closing statement we talked about before, the HUD-1 closing statement. We should see a broker's commission check somewhere. Attorney fees are paid at a closing. Any recording expenses, transfer tax, title expenses, loan fees, tax reserves, insurance reserves that are set up, any appraisal fees due, survey fees. Accounting for expenses, we do what's called prorations. Prorations is settling up between the sellers, the buyers, and the lenders, and who has to pay what. An accrued item is any item that the seller will owe. It's one that it's due from the seller, but it's going to come after closing, so the lender is going to have to pay it. So the seller's got to sort of reimburse the buyer for accrued expenses. Property taxes are a good example. When the property is closed in 2011, the 2011 taxes won't be due till 2012. So this is an accrued expense. The seller pays the buyer for his share of the 2011 taxes that will be due next year in 2012 when the buyer is in the property. Prepaid items are items that the seller has paid in advance, and so he gets reimbursed for. So maybe the seller has paid for, let's say, 90 days of water bills. He's paid his water bill in advance. And so there's 30 more days on it after closing. So the buyer would have to reimburse the seller for 30 days of water bills that he paid in advance. The rule for closing, and we want to know this for the final exam. The rule for closing is that the day of closing is both a day of income and a day of expense for seller. So the day of closing is the day of income. If in fact this is income producing property, let's say rents, then the seller would get the rents for the day of closing. The other side of that is the seller pays for any expenses on the day of closing. So any interest accrued on the seller's mortgage for the day of closing, he's got to pay. Any property taxes for the day of closing, he pays. If there were any electric bills or water bills, the day of closing is a day of expense for the seller when we're doing our proration. So the day of closing is both a day of income, if there is any income on the property, and a day of expense. There's always expenses on the day of closing. Chapter 10, Closing the Transaction Review Quiz. Take that. Good luck. And then you'll want to give us a call with any questions that you have over the course, and also to arrange for your final exam. As we said to begin with, it was a 50-question multiple choice exam you'll be taking. You can either take it at a remote location through a proctor, approved proctor, or you can take it at one of our permanent locations here in DuPage County in Addison, or if possible, if we have someone in the city of Chicago on our testing days when we test in the city of Chicago. So call us or email us with any questions. We hope you've enjoyed this class. We hope that the slide casts have been helpful to you, and we wish you a lot of luck on your final exam and on your real estate careers. Thank you.